How is everybody doing? Welcome back to another episode of the Banker Next Door. Today, I'm going to be covering the first report in the Small Business Credit Survey. Now, this is a survey that comes out every year from the Federal Reserve. It is a big survey, and they like to break it down into usually several different parts. And I'm going to show you that in a minute when we go to the website to take a look at this. Now, I actually decided to break this up into two parts. So I have, part coming out today, and then part two comes out tomorrow. Just because there's a lot in this report to cover, and I wanted to make sure I was giving it ample time to, go over and cover everything. There is a link to the report in the description down below if you'd like to go in and check it out and go look at the report for yourself. But let's look at this for a second. So first, I just want to show everybody the website here. So this is the fedsmallbusiness.org. If you want to go in here and then you just look for the Small Business Credit Survey. So what we're going to be looking at here for part one and part two is basically this is the 2025 report on employer firms, findings from the 2024 Small Business Credit Survey. So if you click on Small Business Credit Survey for a second, we can see all survey years. And we can see here that for 2025, this is the first report coming out this year for 2025. There will be more. And we can see here 2024 reports from the 2023 Small Business Credit Survey. And just to give you an idea of what they report on. So 2024 basically says, Main Street metrics, 2024 report on payments, 2024 report on startup firms from short-term relief to long-term hardship. Some small businesses struggle with debt burdens from COVID-19, economic injury, disaster loans. I've covered a few of these things. And then we also see here 2024 firms in focus chart books on small business data. And then 2024 report on employer firms, which is what, like I said, we're going to look at the 2025 here in just a second. But I just wanted to show that to people so that you can scroll down. And again, bunch of reports for 2023 and then 2022. So you can see how you could get a feel for how the Federal Reserve likes to do it. Like I said, it's a big survey. They like to break it down into different segments and then basically roll through each one of those. So let's go back here for just a second. So this initial page here, before we get into the actual report, this basically goes over some of the survey findings. So I want to just read this real quick. So the 2024 Small Business Credit Survey data suggests that employment growth, along with expectations for revenue and employment growth, held steady between the 2023 and 2024 surveys. But for the first time since 2021 survey, firms were more likely to report that revenues decreased rather than increased in the prior 12 months. Regarding financing, the share of firms that applied for loans, lines of credit, or merchant cash advances remained stable year over year, as did approvals. However, applicant satisfaction with their lenders did decrease. And I'm gonna mention that and go into some things in just a second. But let's just cover very briefly here for a second the survey findings. So, and I think we have four main topics here or categories, if you will. So survey findings. So firm performance and expectations were little changed year over year, though the revenue performance index declined for the second consecutive survey cycle as challenges with sales persisted. The second one, the share of firms with more than 100,000 in outstanding debt remained higher than pre-pandemic levels, and elevated levels of existing debt played an increasing role in the denial of financial applications. Number three, the share of firms that applied for loans, lines of credit, or merchant cash advances remained stable year over year. Approvals were steady as well, but applicant satisfaction with their lenders fell. And then finally, the 2024 Small Business Credit Survey sought insight on some special topics, including the composition of firms' customers, the physical space in which firms operate, and the insurance coverage they maintain. So, okay, so before we go to the full report here, I just want to cover a couple things on banks. So according to the Reserve Bank's latest Small Business Credit Survey, so 70% of community bank loan applicants were satisfied with their experience, compared with 66% at credit unions, 59% at large banks, and 50% at finance companies, and only 28% at online lenders. Community banks' net satisfaction score of 62% topped large banks by 13 points, finance companies by 25 points, and online lenders by 60 points. And then firms that applied for financing at community banks were more likely than firms that applied in large banks and non-banks to be fully approved. So community banks really leading the charge again with small business customers. Small business customers are very happy with what they're getting out of community banks. And that is a trend that we have, has continued for a number of years now. And that's one of the big reasons why I love looking at this survey, because you get a lot of incredible data from this survey, and it really gives you a great picture, a great insight into, how small businesses are feeling about being able to get loans from banks, how banks are performing with the loan process, how quickly they get the funding, how quickly the funding is made available to them. And then going into, just the overall satisfaction. How are things handled after the fact? Did the small business customer get a good experience overall? That, those kind of things really gives you a lot of great insight into a lot of this stuff. But okay, so here is the report itself. So this was just published in March of 2025, just came out about a week or so ago. Again, it's the 2025 report on employer firms. And let's see here. It gives some acknowledgments. Let me blow this up a little bit here so people can actually, so you guys can actually see this as we're going through. That's a little too big. There we go. Okay. And at first here, it just has acknowledgments, goes through the team that worked on it, and then we get into the table of contents. So we have, this is not an overly huge report. It's only about 31 pages or so. So it's not like a ginormous report, but there's a lot of charts and graphs and stuff in here. So the first thing is we get the executive summary, then we get the notes and definitions, performance and challenges, debt financing, and then financing applications. And then we get into other types of funding, customers, physical space, and insurance. And then at the end, 28, we get demographics. And then 31 talks about methodology. So, but let's jump in here to the executive summary. So the introduction. So the Small Business Credit Survey is a collaboration of all 12 Federal Reserve banks and provides timely information about small business conditions to policymakers and service providers. The 2024 survey was fielded from September to November of 2024 and reached more than 7,600 small employer firms, collecting information about the performance, challenges, and credit-seeking experiences of businesses across the United States. The 2024 survey finds that many metrics remain stable year over year. Expectations for future revenue and employment growth, recent applications for credit, and the outcomes of those applications mostly held steady. Rising costs of goods, services, and/or wages. The most commonly cited financial challenge in the past 3 surveys was again the most prevalent issue. The 2024 survey data suggests a decline in small business revenue growth in the past year. For the first time since 2021 survey, firms were more likely to report that revenues decreased rather than increased in the prior 12 months. Relatedly, the 2024 Small Business Credit Survey finds an increase in the share of firms that cited difficulty reaching customers and growing sales, making this the most commonly reported operational challenge. The share that reported weak sales as a financial challenge increased year over year as well. Regarding credit applicants, the 2024 survey data show that despite little movement in the application and approval rates, there was a shift in the types of lenders from which small businesses sought financing. The 2024 data indicate that the application rate at large banks declined by 5 percentage points year over year, while the application rates at small banks, online lenders, finance companies, and credit unions mostly held steady. The survey opened for responses on September 4th, 2024, and closed on November 4th, 2024. It yielded, again, 7,653 respondents from a nationwide convenient sample of small employers with 1 to 499 full or part-time employees. Across all 50 states and the District of Columbia, this publication summarizes data for firms that were currently operating or temporarily closed at the time of the survey. So firm performance and expectations were little changed year over year, though the revenue performance index declined for the second consecutive survey cycle as challenges with sales persist. So employment growth, along with expectations for revenue and employment, held steady between 23 and 24. However, the revenue performance index decreased by 7 points this cycle, following a 3-point decline between the 22 and 23 surveys. For the first time since 21, firms were more likely to report that revenues decreased rather than increased in the prior year to the survey. All performance indices have recovered somewhat from their pandemic era lows, but remain below pre-pandemic levels. So reaching customers and growing sales was the most commonly reported operational challenge, while the share of firms that cited reaching customers as an operational challenge increased from 53% in 23 to 57% in 24. There were declines in the shares that reported challenges with hiring and supply chains. Rising costs of goods, services, and or wages remain the most common financial challenge, with 75% of firms citing this issue. More than half of firms cited paying operational expenses, 56%, or uneven cash flow, 51%, as challenges. The share of firms with more than 100,000 in outstanding debt remained higher than pre-pandemic levels, and elevated levels of existing debt played an increasing role in the denial of financial applications. The share of firms with no outstanding debt, 29%, was virtually unchanged year over year. The 39% of firms with more than 100,000 in debt also was unchanged from 2023, but remained higher than during pre-pandemic years. 59% of firms sought new financing in the 12 months leading up to the survey, with 40% of applicants seeking less than $50,000. The most common reasons for seeking financing were meeting operating expenses at 56% and pursuing an expansion of new opportunity, 46%. While 41% of applicants received all the financing they sought, 36% received just some and 24% received none. Firms that were denied all or some of the financing for which they applied were more likely in 2024 than in 2021 to say that they were denied because they already had too much debt, 41% in 24 versus 22% in 2021. Among the firms that did not seek financing, a majority, 57%, said that they did not do so because they already had sufficient financing. So that is the executive summary. So in the and then we have the executive summary continued, which we will get into in the next episode. So hang tight. I will be back tomorrow to basically wrap up the rest of the reporting on this. So, but again, I hope you found some of that information there interesting there. It kind of hopefully whets your beak, so to speak, for tomorrow's exciting episode. But like I said, with that being said, I will wrap this up by saying, if you like this episode, please make sure to like, share, and subscribe, as it always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. And as always, check out some of the other content on the channel. I hope everyone has a great day out there, and I will see you again real soon. Thanks a lot.